Hi, Warriors. Let's seize the day and capture pips. Give me Y if you're with me. Who's got their game face on? Hi, Steve, Mike, Blake. I was crying just about 10 minutes ago. I have my game face on now. I'm just kidding. Glenn, AJ, I was in a fetal position. I lost pips. Oh. Ryan, how are you? Came in. The other rule is don't be a crybaby. BOE presser. Okay, so I know those guys are paying attention to it. Bill Hines is ready. Mike is ready. Cody, you're here, so you have to be ready. Timothy, Ingmar, Laura, Steve. All right. All right, guys. So let's talk about the presser. So, Ryan, let me go to you even before the charts are up. What's happening there, bro? What you
Hey Dale,
expected?
sorry mate,
Yeah.
I'm just trying to
All
listen
right.
to the clown show and
Uh,
everything else. So no, I'm here.
Yeah, you're listening to the clown show. So, what kind of tricks are they doing, the clowns, today?
Oh,
Are they
I
making you
tell you what,
laugh?
this lot, that could entertain you for a year. Um, yeah. So
Yeah,
well, they haven't done anything. They've kept rates unchanged. The decision was more finely balanced than the market was expecting. We've got a
okay.
5-4 vote versus a 6-3 expected. Um, they're starting to do a bit of a victory lap over inflation. I
How
think
about
we're
that?
set up more for a December cut now after this. The pound, though, there was a lot of bearish sentiment, positioning, hedging going into this. And I don't think the market's going to get that sort of bearishness. So once Bailey's done, we might see a little bit of a reaction. We're seeing a little bit of dollar
You are.
weakness at the moment.
Yeah.
So that's helping, but cable might run away ahead of whatever euro dollar does.
And what do you think? It held that. I guess I should have stayed with my reverse out at 1480. What do you think here in
Yeah,
euro?
I mean, I was short yesterday, and I said in the afternoon before ISM, if ISM is good and we can't break new
Yeah,
lows and hold it, I said if we
yeah.
haven't closed below there by the end of the day, I wouldn't be surprised to see us back out above 115. And when I wake up this morning and we're trading 115.10. So yeah, I, I would like to see a retest of 115. If you get that and it holds, then that would be pretty significant. But yeah, you've just drawn that line in there.
Yeah.
44,
That's
45,
again,
50.
that's kind of my bear bull, bull bear line
Yeah.
here.
If we break that, then we're probably going to reverse a bit more. But if we hold there, it's going to keep the downtrend well in play since we had those highs a month or so ago.
Why is Aussie dogging it today, Ryan?
Uh, just dollar, US dollar.
Okay.
It's having another little pendulum swing.
And the yen's a tricky bastard, isn't it?
Yeah.
Okay,
I'm,
so we
I'm,
had the overthrow, then it got back in, then it tried to come out, but it did not make new highs yesterday.
no, I think that's pretty significant. But we've come off that last high, and now we're sitting in the middle, pretty much.
Yeah,
So again, we're in that what happens next mode.
yeah. With the dollar weakness, respectable pullback in Canada, it doesn't look like any big deal to me. It looks like if people that want to be long would probably are hoping for 40, 50. I don't think they get it because this pullback is shallow as hell. Plus, we had a confirmed high, so that means the probability of it being the high is pretty low. A high, yes. The high, no.
Did
Um,
did did you get that telepathically from me earlier this morning, Dale? Did you dream about that in your sleep? Because I said it looks exactly the same. It looks like a little pullback, a little dip. It doesn't look
yeah,
like we're done yet. I think
giving
if we're
it
under
giving it back
140.70,
grudgingly.
yeah, if we're
Keep,
if we're moving under 140.76 ish, we might see a little bit of the short termers throwing in the towel, bringing a bigger
okay.
dip. But
So then
yeah,
you're looking at the prior high during the
yeah,
correction
round
that
about
should
there.
offer support here.
Hey
Okay,
guys,
buddy.
good morning.
Hey, Blake.
I just wanted to talk about the Canadian just for a minute because and I hear what you guys are saying. I mean, it's a really we haven't even reached a 24% retracement, which is, about 10 pips away from here. But one of the things that people were referencing yesterday was regarding the whole, Supreme Court versus
Yeah,
Trump situation, and they're like, well, hey, they're finding problems with the tariffs, the
right.
IEEPA tariffs, against
Yeah,
Mexico, Canada, China,
yeah.
blah blah blah. But I think anybody who's trying to buy Canadian dollars based on that is really premature. I mean, we're not even looking for an outcome ahead of like the end of the year. So these are just like preliminary arguments. So I think if
Right.
you're out there buying Canadian dollars because the Supreme Court's going to overturn, these tariffs, I think you're really, really premature in your thinking. And
Uh,
I just saw people referencing it yesterday, and I just needed to say something about it.
okay,
So
well, I think that's great content to add right now. And I know that because of that, you've been thinking about it, whether it's, going to be manifesting in a few days or a few months. What are you thinking about the market consequences if the court says you have to give the money back?
that's one of those things that we've been kind of discussing in our community, and I know Ryan and Kman have thrown a lot of comments around there. Michael Brown from Pepperstone, he's been chiming in too. I think it's going to be really messy, and I don't know what the dollar response is going to be. You think about Liberation Day, stocks dumped, but the dollar dumped as well. You know what I mean?
Yeah,
So
right.
you saw the euro just rip higher, and stocks got clobbered. And I don't know if you're going to see a reversal of that, if a little bit of an unwind of that. I'm just not sure what the dollar response is. I do think that the stock market would be it would be in pieces because the messiness, the the messiness that would come after that, whether it's returning some of the tariffs back to
Yeah,
whoever we've hit with them, to you hear Besson's like, well, we got plan B and C ready. So it's like it would get messy, and I think the stock market, just on uncertainty, would come under pressure. Again, I don't know. I'm not sure what the dollar would do, but I think Ryan and K-Man may have some
Red,
thoughts here too.
it'd be risk off in the market.
It would definitely be risk off, but does the dollar retain a safe haven bid or not? Or I think gold would
Yeah.
rally. How about that?
Okay, yeah.
That's something, right?
Yeah. I wonder what the beans would do. Anyway,
Uh,
so yeah, so okay, cool. And you think it's going to take that long for the court's going to drag it out that long till the end of the year, even though it's not that
I,
far away, the end of the year. It's only,
I, it's it's
7 weeks
it's
away.
it's not like it's a small policy rounding error that we're dealing with.
Yeah,
This is what President Trump and his administration ran on, and that this is what they've implemented, and it's affecting the entire world. So I believe
yeah,
there's going to be a lot of discussions around it. I don't think it's going to be like, oh, we'll figure this out by next week. I think
yeah.
there's going to be a lot of talking. But again, that's just my opinion there.
Okay, K-Man's here today. K-Man, what
Yeah.
do you think? K-Man, what do you think about that? You think it's going to take that long for the court, and should they nullify them? What kind
Um,
of market? You think it'd be like a crash kind of scenario in the market?
Morning, Dale. Morning, everybody.
Morning, buddy.
Well, first of all, I have no idea how long the Supreme Court will take to make a decision. Um, Prior decisions based on um, lower court decisions have been made relatively swiftly, but here are they? I have to listen to more argumentation. I'm not sure. So on that, I really don't know for how long it will take. But I've got two thoughts on if they vote against, let's say if they rule against the tariffs, is that one, there's been a lot of talks that there are other rules, other numbers in the rule book that they can hide behind to slap some form of tariffs again on. So that would be I think, a reaction that we could expect relatively quickly. And I trust the Trump administration has already been working on that in case they get overturned for the actual tariffs. But secondly, let's assume that they rule against those tariffs. Yes, U.S. equity markets could come down. We could see kind of a scissor effect, a rebalancing effect between U.S. and other markets on which tariffs had been slapped before. I think the bond market is probably going to go down because that will leave a hole in the coffers, and
Yeah.
they still will need to fund the budget. And I think that the dollar will not get a safe haven bid, but actually getting sold because there's going to be less receivables. And so
Interesting.
yeah, I think
Okay.
that's kind of the three things I see happen. But then again, yeah, as I said, I think that there's going to be other ways of trying to get some form of tariffs back. But yeah, I mean, if you take alone the decision to rule against tariffs, yeah, I guess it's a negative dollar and negative bonds and probably negative U.S. equity markets. Yeah.
Okay. Appreciate it. Makes sense, what you're saying here. So, gosh, it's like we roll from one potential
Yeah.
crisis to another, don't we?
Mm.
I think, aren't you again desensitized? I mean, I remember people would be really freaking out about a closed government this long. I know it gets play now because of food stamps, but it's almost like there's complacency about it. And, because, there's wars and then there's internal things and then there's the economic issues, the war with the Fed. It's never ending. Which
Yeah.
is, if you like
Oh,
drama.
Greer is just on the wire saying that we might get a Supreme Court tariff ruling before the end of the year. So
Okay.
okay,
Yeah.
Well, that's
Maybe,
timely.
yeah.
yeah, well,
Yeah, that'll be right in that week. We'll start winding down for Christmas.
Yeah.
not this year, Ryan.
Oh, okay. Yeah. Well, maybe the market starts, you know how markets are. They might start pricing in some of this uncertainty. Or is it just like NFP number that you have to wait for it to happen? I don't see the
No,
market just
it's mm,
go ahead.
yeah, no. I mean, front running is a big word, but hedging against the possibilities is going to be, yeah, could be. But then
Yeah.
if I don't really know how we can translate it right here and now into FX, for instance, because obviously we're looking at that every day, but the FX volatility is absolutely plunging. It's too easy to buy options to expect huge waves in stuff like euro dollar, for instance, is trading below 5.5%, which is very low.
Yeah,
Um,
but doesn't that make the options attractive? I mean, you're buying,
yeah,
there's no premium.
absolutely, Dale. But
Yeah.
the thing, on the other hand, is that everybody will. It's now getting that attractive that everybody can buy options, which means that the slightest move you have over the price of the premium that you paid, and that premium is lower than before, you're going to find people on the other side because people buying options. Okay, we as retail traders, we may look at it a bit different, but if you look at the other 80% of the
Yeah.
market
The
doing options,
the house
if
selling them.
no, they will be giving liquidity to a market. Let's say for assuming you buy a 2 months, and I'm just looking at the page as we speak now. Let's say you buy a 2 months 116, a 1 month 116.20, costs you 40 pips. By the time you get to 116.60, you're going to see people on the offer because they made their premium back, and then
Yeah.
they will give liquidity. They will put a break on any bigger move that we may expect. That's what I'm trying to explain.
Okay. Yeah.
Yeah.
So, I mean, look, the house normally wins, right? There's the house.
Well, I mean, that's the market makers.
Yeah, there's a house. So,
Yeah, okay.
what else is catching your attention today, brother?
Well, I'm long a few euro crosses. I'm still carrying a base position in euro sterling. I'm long a little bit of euro Swiss. I'm long a little bit of euro CAD. I didn't want to have dollar CAD in position, but I've been buying euro CAD, so that's doing all right. I also bought back a little. I'm actually pretty one-sided on the euro right now, even though actual economic data are not that supportive. It does look like the less dirty shirt out there if we take dollar out of consideration, because when you look at the euro crosses, dollar up or down, they have been relatively well supported, and that is something that I've been looking at.
Nikkei looks like silver.
Push it down and then the beach ball.
Yeah, well, maybe like silver topped and then had to go through. It's going through a period of digestion. It looked because I remember in silver the same thing happened. It held the 9 day most of the way, all the way through the parabola, and then once it got through the 9 day, that broke the parabola. So what happens? What comes after the parabola? So maybe it could just blow again and keep it going. But the fact that it's, look how far above the 9 day it was over the last week or so. So maybe we have a mean reversion trade happening here. Ryan, biggest thing
Hello.
you're watching, biggest thing you're watching today. I know you're still listening.
You,
Anything new
Dale.
come?
You're
Huh?
the biggest thing I'm watching.
I've actually lost about 20 pounds.
Well, I didn't mean it in that way. I mean, as in
Oh,
superstar.
yeah. Yeah. I'm a legend, man. I know.
I was not calling you fat, mate.
Okay, well, I pass a mirror. I try not to look. Um,
I put blankets
so,
over mine.
I'm trying this euro. I feel like I'm going to be wrong. Greg still likes, it's still kind of bearish a dollar. So we'll see what happens at 14.50. I
Yeah.
think this is going to be the area. So just scaling in, have some at 20. I'm going to try more at 50 and then risk 100 pips and see what
Yeah.
happens. So
You know where you're wrong.
yeah,
Yeah.
yeah. So
But what I'm looking at, I'm getting I've got an itch for dollar mex. We're seeing a little bit of dollar weakness, and I want to see if this 1850 gets tested and holds. Because I think if it does, that could mark a pretty significant bottom.
yeah,
Early
yeah.
doors yet, but we've had this break. If it holds this break, then I think we might start to put a dent in the trend down from those highs.
Well,
Yes.
I have this black horizontal line that I didn't just draw today. It's been there for a while. So obviously a big area, highs here,
Massive, massive.
breakout here. Tried to hold it here. It's underneath it a little bit, but I don't know. This
Dale,
Zoom it
that's
out.
that's the 618 retracement, that
okay.
1820 level.
Yeah, I mean, this
Yeah.
looks corrective of this so far. I mean,
I
this
was
didn't look that impulsive, but this just looks like a pullback to correct this
I was
to
saying on the
me.
flow show this morning, this dollar mix is a perfect example of big levels. We all want
Yeah,
our lines to work and we all want our text to work, whatever it is. This one is an absolute monster. We've spent what, 4 months? No, less than that, 3 months, 3.5 months messing
underneath it.
around this 1850 line. We spent 2
Yeah.
months trying to get below it, bouncing off it, bouncing off it, bouncing off it. We spent another couple of months holding below it. So you could take off every technical analysis line you've got and just keep that 1850 and trade off of that. And these lines don't come along that often. You gotta respect them.
Amen. respect the power of the market, and always look left for memory.
Yep.
So, okay, that's it's a great market to be paying attention to. I gather from your reaction, like you're long this puppy.
Yeah, I've been long dollar mex actually right at these levels for a few days. So
Yeah,
I'm hoping for a base. I'm wanted to add. I was a little bummed out when it turned from the 70s. Was it 2 days ago? But yeah, I'm long. But what I want to really note this morning, Dale, is something that we should be paying attention to. You'll notice that the dollar index had actually rejected the 200-day moving average yesterday, and also horizontal resistance.
yeah,
And I think that's a big deal. I mean, this is somebody who's long the dollar. I'm watching this dollar index very carefully because of this rejection. But I also know that if we get above that, and Chris Weston was talking about it last night too. I think everybody's probably looking at this because if you get a breakout, that's gonna be a double bottom in the dollar index, and that's gonna be a hell of a squeeze, which is not what the market is looking for right now. It's not, you have everybody that's really still short dollars.
yeah.
So I think if the dollar squeezed aggressively like that, that would be pretty pretty damaging, and it would get a lot of attention. I know, like Kman said, right now volatility is really low. I mean, if you look at 1 month vols in the FX market. We'll just go to euro right now. You'll see 1 month vols. Yeah, I mean they're really. I mean they're below 5.5%. It's it's not good, but that'll tick up if the dollar index breaks out. That'll be that's
Those are
gonna be.
more like Jim Welch objectives, 104, 105.
Yeah, I
Most,
mean,
yeah.
yeah,
Go ahead. Go
yeah.
ahead.
I mean, look, I mean, it's a double bottom any which way you slice it, right? I mean,
Yeah.
that's the way it would be. And let's not forget that the dollar index is not far off of its weekly,
Trend
long term
line.
trend
Yeah.
line. Yeah, that it's held it, and we did have a false break below it, a
Right.
month ago or whatever it was. So I
Yeah.
still think that the dollar is worth looking at these levels for sure. Hey, real quick before we wrap things up, I did want to ask Ryan, did you pull anything out of the BOE commentary that Bailey was saying?
Not nothing that he's really been saying. The usual boring, nearly fall asleep thing. But I think we are on for a December cut. I think there's a higher chance than we were before this meeting. It was fairly high anyway, but I think he's teed one up just with the comments in the statement, claiming victory on inflation and the economy is not doing too well. But I think it's going to depend on some of it will depend on what Rachel Reeves does at the budget. But yeah, I think if
Okay.
unless we see some real big upside surprise in the data, then I think we're getting a cut.
Okay, yeah, and so we're getting a cut, and then they're also going to have to deal with the budget, right?
Yeah,
So that's going to be the other thing that the Bank of England's going to be, dealing with. All
yeah.
right,
As I mentioned earlier, there's been a pretty big amount of positioning, hedging, bearish in the quid into this BOE meeting. So once he's finished, I wouldn't rule out seeing the pound maybe having a little bit of a rally, but I expect that to get hit because the budget's still coming up. I know Kay's already jumped in, but if we get a decent dip in euro sterling, I'll probably add to my longs.
got it. Well, speaking of sterling, we're at the 618 retracement. I would argue that this is previous support, 618 retracement. You guys already got that update right here regarding sterling. It would be right here. So we knew that level was coming up at just above 131, which we're at right now. So if we break that, I mean, it would loosen it up a little bit, maybe to 131.40, which is that previous support from back here, right? Whoops, not that one, right
Yeah.
there. Yeah.
Blake, I was thinking a lot of people don't even know that when we see like a pattern in play, that if they have the app, they don't have to be home and a prisoner of their where they trade. I know you do a lot of stuff on your phone, so that's pretty cool that you could go about your day if you don't want to focus on what's happening in the market, and you'll know if something's important, you're going to get a text to alert you. You
Yeah,
can get alerts.
that's right. Whenever there's a new update, or I just put in this pattern in play literally 23 minutes ago, 22 minutes ago, that does go directly to your mobile app. So, whether you're
That's
using this,
that's a
yeah.
big advantage for people that enjoy freedom.
Yeah, absolutely. 100%. If you took a poll of our traders, we have some pretty advanced professional traders in our community, guys and gals that have been trading on desks for years, and that are in our community. There's a lot of people that trade on their desktop, but so many are on mobile devices nowadays, for
Yeah.
sure. So, hey, real quick, we got just a few minutes, and unfortunately, we don't have any data coming out. So, yesterday's ISM data came in better than expected. We have, U.S. data doesn't look horrible.
I, I heard the employment aspect of it was not so good.
How did you read the
Below.
ISM data specifics, Kman?
Well, they were a bit better than expected, but yeah, the employment index is still below 50, but they were better. It was coming in at 48 instead of 47.5 expected and 47.2 prior. But the news this morning was the Challenger layoffs report, which came out 2.5 hours before it had to hit the wires. Somebody at Challenger must have hit the button, or the clean
Oops.
lady or so hit the button over there to bring it out. There was some big reports, but actually just catching up on what all the companies have been telling us of late, and that they are going to fire a lot of people, and the hirings. Which is just the last paragraph on that report came in a bit lower than what prior was reported as well, and especially compared to 2024. So that was the weakest side. It had a kind of an impact, but it is then again not like a major one. But there were a few rumors that some people may have had a look at that report even earlier, and I was wondering whether that, especially that moving gold or so, would have already had to do with it. But gold is bit. So yeah, that report was pretty horrible actually. The problem is we don't get any other official job reports out, right?
Right. Yeah, I don't think we do. I think
No.
that's it. I mean, we're not going to get one at the end of the week, which we should be getting tomorrow. So I don't know. Let me just double check that really quick. Yeah, tomorrow. Hey, the good news is we will have Canadian employment tomorrow. So
Yep.
that's good news. We'll get some activity right here on the Face Show. So that's going to be pretty exciting.
All
Um,
eyes on the syrup swiggers.
what's that?
All eyes on the syrup swiggers.
Syrup wickers.
Swiggers. No, swigging the old
Swigger.
Swiggers,
syrup.
Swiggers, got it. And speaking of dollar CAD, I want to point out, you guys, we were talking about a little bit earlier. There's that 24% retracement, very shallow retracement thus far, at least thus far. Pullbacks have been very minor, but as we were talking about yesterday, this is a big channel that we're following. We're just knocking our head up against the channel resistance, 127% extension. Even Benedict in our chat room, he was like, "I'm getting out of my dollar CAD longs," and I'm like, "You're a wussy." Benedict, if you're listening in, I'm gonna stick to that. You are being a wussy. But no, I think if we can get above, these highs that we put in yesterday, that's gonna be pretty bullish, especially going into tomorrow. Still looking for a move towards 143 from this big triangle pattern. So still looking for a completion of that to take us to 143 eventually. So. Well, we'll see. We'll see. It's still a lot of work in progress regarding the CAD, and like I said, we'll be here live for tomorrow's Canadian jobs report. I
You have a
know
view on yen before we go, Blake? You have a
I
view
I
on
do,
yen?
but my view is very much boxed in. I talked about this on the trade-off show with Chris
Okay.
Weston yesterday.
I didn't
There's
watch
a
it.
this is a big triangle, right? There's
Yeah.
your triangle
All right.
resistance.
Nice
That's
look.
capped us. It's also the
Yeah.
127% extension. This rising trend line comes in, you call it
Yeah.
153. So you get below 153, you get above 154.50. I'm gonna let the
That's a
market do
beauty.
the I'm gonna let the market do the work for me because I'm not like, Kman that has probably more of a view. I'm just kind of like, I'll just do whatever the market goes, wherever the market goes.
What would Nostromo do?
No, tomorrow going to sit on the sidelines. That's what he's doing.
All right,
he's
just
he's
curious.
he's going to wait for some clarity. Yeah. So,
Yeah.
with the yen, and like I said, I think both Ryan and K-Man probably have some better views of the yen than I do. So,
Okay.
Nope.
All right. So, the guest is here. If you want to go into a wrap.
yeah, let's do it, guys. If you're not having conversations like this with all of us and in the chat room talking about whether it's the Euro Canadian that K-Man's looking at, or if Simon wants to call people idiots, and by the way, that was regarding the Bank of England, or just having these conversations in a very close knit community, you know take advantage of it. It's $1 for 10 days. Jump in and chat with us, and have all this at your fingertips. And because when the government is done with this shutdown, which could be between now and the next 2 weeks from now, there's going to be explosion in volatility. You're going to want to be in a good chat room for that. So, with that being said, it's $1 for 10 days. Try us out, and make sure you sign up for our newsletter. We've had development meetings every day this week with for trading analytics, so if you want to know about our upcoming launch, this is free to join our newsletter that goes out once a week. And we'll be having a drawing for the newsletter for our giveaway this month. Right, Ryan?
Yeah, that's coming up. You'll get that in this weekend's newsletter.
So if you are in the newsletter, you will be available for one of our giveaways. I think we're giving away a couple of trader funding programs, assessments, and that's free if you're involved in our free newsletter. So get involved.
Don't isolate, collaborate.
There we go.
All right. So, thank you, Dream Team.
Thanks, Coach.
Thanks, K-Man. Thank you, Ryan,
Thank you,
Blake.
Dale.
Best team on the net. And I have Jerry Robinson with me, but he doesn't want any upward mobility and keeps declining being promoted. So, Jerry, this promotion is not a life-changing event for you. There you go. You can still go back and work for your own company. All right, brother? Huh? I'll demote you at the end. At the end of the interview, you could count on being demoted because there are two kinds of managers, ones that have been fired and ones that will. Okay? So, Jerry, welcome back, brother.
It's great to be here, Dale. What's going on?
All right, so I know you're in the 1%. You own assets. You're riding it up, and you're probably worried about the big beautiful bill not giving you an extra 300K a year benefit on your taxes. Is that your number one concern right now?
You're not quite, but you were close. You were close.
All right. So, what do you think? Is this market running, those gaps that we filled, even though we're coming back? They're called exhaustion gaps at the top there, Jerry. Do you think this market is running on fumes, which comes out of exhaust pipes?
No, I don't.
Okay,
When I'm
fair.
looking around here, I see a lot of noise. I mean, the noise levels have gotten high. But
Yeah,
let's be honest. I mean, we have a government shutdown.
yeah,
We're living through this technological shift,
yeah,
which is shaking all of us. It's a really wild time. We have these companies that are now, take a look at Nvidia. I mean, Nvidia, which, back in 2022 was, we were buying it around like $700 billion market cap. We saw it go to 1 trillion, 2 trillion, 3 trillion, 4 trillion, just hit 5 trillion just since 2022. So it's understandable that people are like, what in the world is happening?
Yeah.
You
Well, just
have,
listening to you talk that progression made me dizzy.
right. It's nobody's ever seen
Yeah.
anything like it.
Yeah.
And so, that's definitely been, I mean, we've never had a $5 trillion market cap company. And the thing is that I would expect that NVIDIA is going to keep getting bigger. And here's the reason. Um, the reason why I don't think that we're at the end of the road for this particular rally is because, there's a few catalysts that could be coming up that
Okay.
could really give it the pedal to the metal. Um, First is the fact that Trump's tariffs are at the Supreme Court now, and I had a chance to listen to the whole oral argument, and I listened to it, and I was surprised at how skeptical the Supreme Court justices were about his tariffs. And
Even the
while I
ones that he put in there.
Well, yeah, the ones he put in there were, yeah, true. There were a few of them that were, I think, Justice Thomas was, predictably uninterested in the tariffs, but others, you're right, it was very much so, and so I don't necessarily expect them to, completely devastate his signature policy, but I think they're going to do something that could potentially, stifle his ability.
Alter it.
Yeah, alter it in such a way that could be very bullish, put more money in people's pockets and things like that, and also tone down some of the anxieties that we have about the global economy. So, and the thing is, the Supreme Court just heard those arguments yesterday. They don't have to make a decision until June, Dale, but the
Yeah.
expectation is they're going to make a ruling by January. They can't let this thing sit. So they're going to have to do something with it. So I think that right there, if we have the Supreme Court say, look, Trump, you just can't do unconstitutional things, and that means that we don't have these, big tariffs that are causing all these anxieties, then I think you could see a lot of repricing of risk, and that could really lead to the market to go higher. I mean, when we take a look here at this particular market
I
here on the
think
screen.
yeah, I mean, haven't we repriced risk since April?
Well, certainly, but we've kind of had to get along with the current tariffs as they are. Um,
But
so
it hasn't put a dent in risk. But I could understand, a lot of people think it's going to be negative. It's our guys. We were talking about it today, and that it would be a negative event for treasuries because all that money you're taking, the government's losing all that money, maybe for the dollar. But you think it's going to be a bullish event for the economy, taking all the tariff pressure that people are dealing with off and
yeah,
kind of have let freedom ring in the capital markets again.
yeah. I
All
mean,
right, all right.
yeah.
I had no idea, Jerry.
Well, we'll
I
see.
yeah, I feel like I'm living in the twilight zone.
It
So
really is.
yeah, so okay. Do
Well,
you
we
have
also
upside? Go ahead. I'm sorry.
w-
I'm
we
interrupting too much. Go
no,
ahead.
no, no, you're fine. But we also have a few other things. We have the fact that the Fed is going to continue to cut rates. We heard
Yeah,
Jerome Powell last time.
yeah,
You know, you understand that Mr. Powell has to talk tough. He has to appear like, the Fed is really independent and he's not going to let Mr. Trump or President Trump intervene. But the fact of the matter is that, Powell's just about out of there. Trump's going to put his own stooge in. And then what we're going to have is we're going to have a completely compromised Fed. And so I think what we're seeing
yeah,
now is Powell is trying to play tough. He's like, well, we're not sure if we're going to lower rates in December. Of course, they're going to lower rates in December. The market doesn't even believe it. If you look at the Fed futures market, they're expecting a rate cut in December. They're expecting a rate cut in January. So, so the Fed is talking tough. We're not going to let the president, politicize our process. But in reality, Trump wants lower rates. And quite frankly, uh, with the state of the commercial property market, with the state of many things in America right now, rates coming down would be helpful. even though rates aren't that elevated, the problem is we have, as you well know,
How
30.
are lower rates going to cushion a credit crisis? Like Jamie Dimon's cockroach theory about what's happening in junk in the shadow banking system. And it'd be okay if it was just a shadow banking system, but the financiers of the shadow banking system is the commercial banking system.
Yeah. Well, if of course lowering the rates is going to extend the circus. I mean, it's gonna let the
Okay.
thing continue
Yeah.
on and on and on. And see, that's the name of the game is we don't want the game of musical chairs to end. And certainly with the fastest growing item on the in the budget right now being interest on the national debt,
Yeah.
everybody and their dog has an vested interest in seeing those rates come down because otherwise, all this debt we've taken on is just going to continue to mount and mount and mount. So the thing is that we got too much debt, Dale. You know that we got $38 trillion national debt. People are spending, the government's spending like drunken sailors. The average American out there is, drowning in debt, and they can't afford houses. I mean, it's a big mess. And this is why I've been saying for a long time, the only way that the average individual out there can really kind of protect themselves is to have a diversified asset base. Assets are going to go up, and they go up with what? With liquidity. They go up
Yeah.
with the money supply. And guess what the Fed's going to do in 2026? They're going to stop quantitative tightening, and they're probably going to move into quantitative easing if you don't consider rate cuts quantitative easing. They may move into some sort of quantitative easing program in addition to that. And so that's going to be goosing the market, providing more liquidity. And on top of that, the earnings are real. I mean, if you look at the S&P 500 PE ratio right now, it's about 30. Okay, 30. And that's not cheap, but at the same time, it's not bubble territory. It's not like what we saw in 2000 and 2000, the dot-com bubble or anything. And
Yeah.
also back then, in the pets.com era, these companies didn't have any earnings. I mean, look at the earnings that are coming out in Q3. Look at the amount of money that not only these companies are making, but that they're keeping. I mean, these corporations, Google, we already saw, Apple, Amazon. I mean, these companies are making money hand over fist, and many other companies are reporting good. So when you look at the earnings season has been, phenomenal so far. And so, overall, I think assets are the place to be. In addition, I think Bitcoin, even though it's pulled back, I think Bitcoin is also very well positioned for the end of the year and as we head into next year. So there's a
Okay.
lot of opportunity. I think there's a ton of opportunity right now.
Okay. Um, Bitcoin, you have levels or you're not price sensitive to owning it. I mean, 100K is a nice discount from a few months ago.
Yeah, let me bring over. I got a chart for that. Hopefully, yeah, we can see the Bitcoin chart. You can see, first of all, on this first daily chart,
Yeah.
we broke out above the 200-day back in April,
Right.
right after the Liberation Day tariffs. But then we rode up, and then we just came right back down to that key level. That 200 days still rising. We slip right below it. And the key area I'm watching on Bitcoin is the 50 weekly moving average. That actually has held since the breakout back in early 23 when all this downtrend kind of came to an end and we
Okay.
started popping up above the 50 weekly. We held it in late 23. We held it again in mid 24. We held it again in early 25, and we're right back at it now. We're sitting right above it. We have a wick that took us below it, but the wick doesn't
Yeah.
count. The body has to, as long as it holds above it. And so we're right there at that level, making it a potentially good opportunity for entry for Bitcoin.
Was that a daily chart or weekly? What was it?
This is a weekly chart. Yeah, the
Okay.
50 weekly is what we're watching. Kind of translates to the
Yeah.
250 daily.
Yeah. Okay.
Um,
So you have to, really to see what kind of candle you have. You don't know till tomorrow. But we have come off the lows anyway. I see the wick to the right of that chart.
yes.
Yeah, nice. Okay. Bitcoin, gold's come back down. You buying gold on this pullback?
Yeah, let me go down to gold. I've got it right here. I got a few charts. So, gold, I think, again, also looks good. There's a issue here with this particular chart. Let me show you the one that really helpful. This long upper wicks, those who follow technical analysis, which I'm sure many of you
Yeah.
folks do, watch out
Yeah.
for those big, long upper wicks, and you can see those can often lead. Obviously, they can be reversal signals like longer term, but also they tend to just be signals that, look, you got to consolidate for a bit on this
Right.
gain. And
Right.
so in the last few times, like here we had a long wick back in early 25, and it took us, this is a weekly chart, so every one of these candles are weeks. It took us many, many weeks to get past that. And then we took off again once we got past it. And now we just put in two big long wicks there at the top, around 43.80, and then we've pulled back. But I think this is probably going to continue higher. And the reason is, of course, is that there
That.
hasn't, yeah, I mean, Dale, there has never been a better president for gold than President Trump. There's never been a better president for gold. In fact, the very best president aside Trump for gold was Jimmy Carter. But
Yeah,
Trump,
he was
ta-
pretty good.
but Trump just takes the crown.
Yeah.
So to imagine that the fundamentals that are driving gold, i.e., concerns about debt monetization, concerns about erratic federal government, concerns about all these different things, those aren't going away. I mean, we got 3 more years of this guy, and he's great for gold. And so I view every pullback, any meaningful pullback in physical gold, as an opportunity. And so I do see this pullback as an opportunity. You could say that this is the end of the road. It's difficult to imagine that it is the end of the road if we have 3 more years of Trump, if we have the Fed now saying we're going to lower rates over the next 18 months, and all these other bullish, and then of course, people are still concerned about the economy. Now, I think if we find out that the Supreme Court is going to overrule the Trump tariffs, that could take some of the wind out of the sails for gold. So I think that announcement, which could come, as like I mentioned, as early as January, is something we do need to be on the defense for, because while it could be very good, it could also be very jarring, and nobody knows what's going to happen out of it. So I would just say, as I look forward, the Fed is obviously always an unknown of what it's going to do, and that's always a potential thing. But the other thing now is this Supreme Court ruling, because it could really
Yeah.
bring some upheaval to the global economy, at least temporarily, and it could be a great opportunity for traders and for longer term
Do you
investors as
think
well.
initially they'll be risk off on this? Because people just will, just not realize the implications for a while?
No, no,
That's just like, you think that if we get that decision, the market will gap up and just blow off, is what you're thinking, right?
well, I think it's going to be bullish overall. I mean, right now we're all paying a tax. We're all paying new
Yeah.
taxes just to buy the things that we had before in the middle of inflation. So it's
Yeah.
going to be good for consumers. It's going to be good for trade relations. It's going to be good for
Everything.
everything. Yeah, everything. And so so taking off these tariffs, which have, by the way, haven't raised much
So
money.
the court, so actually the Supreme Court could save his presidency.
By destroying his signature policy.
Yeah.
Yeah,
Right. Save him
yeah,
from himself.
right, right.
I'd like your look on the dollar, Jerry. I love your charts, and we're approaching crossroads. I know it's just I'm looking at this bounce from 96 as a bear market rally, maybe to 103 or so. What are you seeing?
Yeah, it's again, this was an interesting chart because we did see, I think we went over this last time we were talking in August.
Yeah.
We had this, incredible rally once people expected Trump to win in the dollar, and this is exactly
Right.
what happened in 2017, 2016, 2017, where it rallies into the inauguration, tops on the inauguration, and then absolutely gets annihilated on the back side. It came down 10% or more
Yeah.
from the peak,
We're
more than
start in I don't know how many
oh
years. Yeah.
yeah, outrageous. And nobody wants to see their currency declining that quickly. It may decline, but you don't want to see it going down that fast. So it came down in an absolute hurry. Then we formed this kind of consolidation pattern where it kind of licked its wounds. We recaptured that 50. The 50 is now rising, but notice that 200-day is just coming down very quickly, and it's
Yeah.
already
It's
reacting.
reacting.
It's
Yeah.
reacting to that. And if you come down and look at this other chart of the dollar. Boy, this has been a helpful chart for me over the years. Saved my hide a few times whenever I was not sure about something. But here you got 101 to 100, that resistance level. You know, that's going to be
Yeah,
a bear to get past.
right.
Plus, what's the catalyst? I mean, you have to think, what's the catalyst for the dollar to go up 5, 10%? What would be the catalyst? I mean, I mean, the government shut down. They're spending money like drunken sailors. They don't have a plan for health care. They don't have a plan for nothing. I mean, so what in the world is going to drive this dollar up and restore confidence? Instead, they're going to be cutting rates. That's not good for the dollar. And then of course, if the tariffs are go away, that also could have some interesting impacts on the dollar. I haven't really thought about what those all might be. I need to sit down and think about that. But you know that'll also have some impacts. But regardless, the 100 to 101 resistance level,
Yeah,
that's an area where
we're
getting
right
past it.
there. Yeah.
Yeah, getting past it. I just don't know. I don't know what that looks like. I don't know why that would happen. Not that it
Maybe
can't.
things
You
are
know.
worse in Europe. That's how it
Yeah,
could happen,
true.
I
That's a good
guess.
point. Yeah, you could have a blow up in some other country and you get, a rush on the dollar. But again, it certainly won't be because of the fundamentals here. I don't see that.
Are you adding agriculture? I know how you think. And corn and beans and wheat have been real cheap for a while.
Hmm.
And beans, that was part of the promise, the framework with China. I don't know if you could call it a deal or not, but all the grains look pretty good to me, and they've been very out of favor. I was wondering if you're
Yeah.
looking at them.
Well, we do follow them. We have an ETF leaderboard that we track 150 ETFs, and inevitably we have some ag on there. We, DBA,
DBA, yeah,
DBC, things like that. But
okay.
soybeans, for example, finally catching a bid after there's been some decent news about that. We'll see if that holds. And
Look
then,
at the weeklies, the bases that they've built, Jerry. I mean, this is right
yeah,
up your alley, kind of
right.
stuff.
Yeah, exactly.
Oh,
Um,
okay,
yeah, and wheat's also, yeah, like you said, that since mid-October, things have
yeah.
been improving. Gold and silver, silver is another one of those metals that I think is offering a good opportunity here as well at 48. Again, a lot of people get caught up in the gold and silver, movement. I mean, at the same time, I like gold, I like silver, I have core positions in them, but I don't view them as things, to me, they're portfolio insurance. I mean, the gold is a portfolio insurance. I don't expect to make money from my insurance. I expect
Okay.
it to protect me. And while I think we have more upside, I'm not going all in, of course. I
Do you
keep,
believe that people should own and possess physical?
yes. Oh, absolutely. I believe that people should own, physical. Like for example, I think an allocation of say, this isn't advice. This is just what I do. But for me, I allocate about 10 to 15% of my total, investable assets to hard assets. Whether it be
Okay.
gold, silver, or not including real estate, but gold or silver or machinery that produces income or whatever. That those kinds of hard assets, I think everybody needs to have. And the case in point is the rally we've seen. I mean,
Oh, amazing.
it's been incredible. It's been incredible to see. And I don't think it's over. Again, I don't think this rally has seen its final days. I think we still have more upside. I think we see
Yeah.
gold 5,000. I think we see silver, $60. You know, going out several months as we get into 2026. I think that's probably where we're heading.
Well, we were almost there. We were at 54, 55, weren't we?
Yeah, we were. I mean, it's not too far
Yeah.
away. A
Yeah.
lot of a lot of money's being made in the miners right now because miners obviously are
Oh,
printing money now. I mean, if they're pulling out
yeah.
$4,000 gold and it cost them 3,000 to get it, they're making a good spread.
Yeah.
Um, so at least even if gold settles down here, Dale, and it just kind of hangs tough, gold miners should be printing money for at least the next couple of years. At these levels.
Okay. Anything in the energy patch, or is it premature? I know nat gas is broken out.
Yeah, I have noticed that one. That's on the move. I used to trade that a lot. That used to be my specialty, but I haven't looked at that market in quite some
Well, your
time.
wife, your wife doesn't let you trade it, right?
Ah,
She doesn't want to be a widow. She wants it. She wants you to be around
That's
for
right.
the
That's right.
honeydews,
Yeah, she loves me too
right?
much. She doesn't.
Yeah. All
But
right.
but uh,
So,
but yeah, but oil in general, Brent in West Texas. I mean, that no, it's too early to say anything.
yeah.
It's just kind of grinding,
Okay.
grinding.
All right. Uh, what's the most important thing people need to keep in mind, Jerry, going into year end?
To ignore the noise, Dale. There's too much noise, and right now, the noise is AI bubble. You know what
Yeah.
this AI bubble talk is? I mean, if you look around, you'll hear a lot of that talk. And what's happening is that yes, there are concerns that there's a lot of froth in different areas of the market. We know that, like it's obvious, but there's a lot of areas where there isn't froth. And also, as I mentioned earlier, that S&P 500 at a 30 PE is just not screaming to us that, this is the end of the road for everything. So I think if you can ignore the noise, if you can buy into fear, right, and
Yeah.
then sell into greed, you have the makings of something good. And I think for most part, a lot of people do the opposite, right? They sell into the fear and then they buy into the greed, and that's why, if you look at money managers, for example, this year, money managers are having their worst year, and I think 3 decades, and maybe four, but I think 3 decades. They've never, you got to go back, a few decades to see this kind of underperformance. The S&P has done so well,
Yeah.
uh, and the money and
They've
money
been too
and
cautious or wrong.
oh yeah, yeah, they were wrong. I mean, many of them got on the wrong side of the trade. They didn't see it coming. I mean,
Yeah.
If you look at Nvidia right now, many people will say, well, Nvidia, is wildly overpriced. And you know what's funny, Dale? Let me pull up Nvidia here. And you can see they broke out above their 200-day moving average
Yeah.
back in May. Okay, so this is a relatively new 200-day moving average breakout, and it came to its 50. Okay, and now it's bouncing. And if you look at the PE ratio and I don't believe in PEs that much, but I think you can look at them and see what they say. The PE ratio on Nvidia last time I checked is lower than Walmart. Okay, Costco has a higher PE ratio than Nvidia. So the point is that to think that this company that's dominating the global economy and we're moving into this AI age, and you've
Yeah.
got the pick and axe seller right here, Nvidia, that is
Right.
trading at a cheaper multiple than Costco. Yeah, I don't think that we're really in the ethosphere here.
Nuno wants to know if your moving averages are simple or the other.
Well, it all depends. So on the daily chart, I use three pretty religiously. I use a 200 simple moving average. That's the gold line.
Okay.
I use a 50 simple moving average there for the secondary trend. And then the minor trend, I use a 14 EMA. So that's some people use a 20, some people use 21. I use a 14. Been using that for years. And I see that oftentimes the price will respect that 14 EMA when it's trending
Yeah.
well. So I
Yeah.
use 14 EMA. Otherwise, I tend to use simple moving averages.
You could learn a lot more from Jerry. Show them where they need to go.
Yeah, well, they go to followthemoney.com. I'd love to have them come over. We have we have a free podcast. We have lots of free resources. You can come in and just hover over this follow the money and see all the different free resources we have right here. But in addition to that, we have memberships, and the memberships we say, well, what's that for? Well, it's what we do is we help and educate independent traders and investors. So they come to us for
Yeah.
trend research. They come to us every single weekend. We put out a big report with
Courses.
all of our
Yeah.
rankings for momentum traders, whether it's for long-term investors. We have courses. We have a weekly webcast where we educate. So I mean, there's lots of stuff here. And I would encourage people to come and kick the tires and check it out. We have a completely rock solid refund policy. If you try it out and don't like it, that's fine. We don't mind. Come and try us out and learn how to trade and invest and navigate these markets without the noise.
Right. All right. Well, you know what isn't noise, Jerry?
Oh no.
Your imitation of Elvis Presley.
Oh dear. Oh dear.
That is sweet, sweet sounds. The sweet sounds of Jerry Robinson.
Oh
Take
dear.
it away, bro.
Don't be cruel to a heart that's
Heart is
true.
blue. Don't
Don't be
be
cruel.
cruel
Come on, Dale.
I don't love no other lover.
Yes.
Baby,
It's
you
just you.
I'm
Take it
thinking
off.
of.
There we got it. We're
Ah,
going
all right. We
Vegas
could
next.
be like the flying Elvises jumping out of
Yes.
an airplane.
I'll meet you in Vegas.
Jerry, look, how long have we been talking now, bro? How many
About there.
years?
Oh, it's been many. It's been
Yeah.
many.
All right.
At
So,
least 2 or 3.
yeah, I've seen Jerry be right for a lot of things, on a lot of things for a long time. He's a pro. So, appreciate your
Thank you,
giving
sir.
spirit coming in here and sharing your stuff. It's always clean. And your content and what you say is not hedged. It's, what you think, right or wrong, and enjoy our conversations every quarter. And
Me too.
so,
Me too, sir.
so
Yeah,
I
thank
hope you have a great, fall, winter trading season. We'll probably be talking in January, February, something like that. We'll see what
That's
the new
right.
year brings. The
That's right.
Supreme Court will have acted by then.
Maybe. We expect it by January. Hopefully we'll get it
Yeah.
by then.
Someone said that Trump has a big announcement at I think 11 a.m. Eastern. He's going on
Hmm.
TV. So maybe that'll be it. Anyway, there's always going to be emergencies and big announcements.
Always.
Okay, always. Thank you, my trading warrior brother. Appreciate it,
Absolutely.
Jared.
Thank you, Dale. I appreciate the opportunity and bless you, brother.
All right. My trading warrior brother, Jerry Robinson. Follow him on X or go to his website. On X, it's FTM Money. Follow the money. So that's a wrap, everyone. Don't just count your cash and your coins and your shares. Count your blessings. Adios. We'll wrap the week tomorrow. Take it easy. Thanks again, Jer.